The Bulls forget to come back from the holidays. Can they show up for a Friday bounce? This is Invest with Jacob. Okay, guys, so in yesterday's video, we talked about the fact that with the extended waves to the downside, it was likely we would see the 47.25 to 47.08 areas, and that's what we saw as the market moved down towards 47.25 at the close before trading sideways from there. Now, the question is, can the Bulls step in and give us a bounce? I'll get into that in just one second, but first, if you're new here, welcome to the show, guys. My name is Jacob Gabbard, and this is Invest with Jacob, where we use Elliott Wave Theory to break down the SP 500 and the NASDAQ. I highly encourage you to hit that subscribe button down below so that you can get our daily S&P updates, our trade setups, and our buy alerts. All right, guys, before I jump into the charts, we are killing it. 3 trading days in 2024, 3 winning days in PT's room. They are absolutely smoking it, as you can see on the screen. He is killing it. We're absolutely having a great time. If you want to be part of a winning team, stay tuned for later in the video. But for now, let's jump into the chart and take a look. Okay, guys, so here we are on the 1-hour futures chart for the S&P 500. And since the beginning of the week, we've been talking about this 1220 low and needing to fully get through it. They did that today at the close, getting us down into that 47.25 area, 27 area, to make it a little more likely that we are in the bigger B wave path. Can this still be a wave 4? Yes. Is that the most likely path? It is not at this moment. So we can see a deeper low, but corrective depth theory, guys, is important, and it's something we teach in the course, and here's why it's important. So you get a market that goes up, and it works on higher high, higher lows philosophy. So you have a higher high, you have a higher low. This low is higher than the previous low. Then you have a new high. And when you come down, you need to hold this low to create a higher low. When you don't hold this low, now you have a lower low than you created here. And so the higher high, higher low has now turned into you have a lower low, and then you'd be looking for a lower high and then down from there. So that's why corrective depth theory is important, and understanding where the lows are that are important. This one was important for this particular pullback. Doesn't mean they can't turn it back up and go higher from here. It means that it's less likely that they will in a direct move back over this high. Doesn't mean they can't give us a B wave bounce here, which is the more common path that we would expect. And we'll go over these in just a second. And then another move down. It means that it's unlikely that they'll just stop right here, turn back up, and go higher. So our primary path is now that we are in a bigger B wave off of this circle A wave at the top. For that to play out, we would look for them to give us an A B wave bounce here, and then a C wave down. And it's very possible that could be A of A. They can't extend this C wave directly lower. We'll have all these targets if and when they do give us a bounce. But we're looking for this bounce up, and then we'd look for the C wave down into that 4,500, 4,600 area. But this could be just A of A, B of A, and then C of A, and then a B and a C down from there. And it could take a little longer for this to play out, maybe the month of January or something like that. But this whole pattern here could be subdivided A, B, C. So it is possible we continue in a direct fashion lower. And if that's the case, then I would call this all of A. If they're going to continue down here into the top of the 4660 area and then bounce, then this would be all of A in a more direct fashion. We'd be looking for B and then C down from there. So it just kind of depends on how deep they pull this down here before they give us any kind of significant bounce. The deeper they take this, the more likely we are in the bigger A wave that would take us into the 4660 area, a bounce from there, and then C down into the 4500, 4600 area. And again, we'll have those targets as we get a bounce. But that's kind of what we're looking at. This 4727 to 4808 area is pretty important. 4808 comes in at the top of this next support zone. So I do think it's possible that maybe on the jobs number tomorrow or whatever, we come down, spike into this area, and then bounce. But if they break through this 4708 area cleanly, then the next stop is the 4660 area in a more direct move down, where we'd be looking at, as I said, a bigger A, B, C in this kind of fashion, as opposed to having the A wave broken up into 3 bigger legs where you have an A, B, C for A, and then a B wave, and then down. So that's the 2 paths we'd be tracking, either a direct move lower towards 4660. For that, we'd want to see a pretty clean break of 4708, or they're going to hold the 4700, 4708 area, give us a smaller bounce down, and then another bounce, and then down. So those are the two main downside paths. Again, can they turn it back up? Yes. What number do they need to get back through? Well, the first thing they need to do is get back through 47.71. If they can get back over 47.71, that would be our first indication that we're at least seeing that B wave bounce up toward the 47.90 to 4800 area. And if they can break back over 48.15, that would be a pretty strong indication that they're actually going to try to go ahead and take this directly higher up toward that 48.81 area next. So 48.15 is the key number to the upside for the bulls to break. And if they break over 47.71, we would look for that 47.90 to 4800 area to hold to still give us that C wave and additional moves down into the 4500 to 4600 area. Over on the NASDAQ, they continue to sell to the downside. They pushed it through the 236. So technically that is deep enough for this wave 4 we've been tracking, but we'd like to see them come down and hit at least the 16,153, especially given the strength of this move up. Typically in a standard movement, you would expect a bounce around this area and a B wave up toward the 16,800 to 16,900 area, and then a move down into 16,153 and a pretty sharp C wave. That would be a standard move, and that would be the expectation. That's what we're looking for. We would like to see the market bounce. And to get back over 16,600 would be a good start for the NASDAQ to kind of confirm that they're in that move up toward the 16,800 to 16,900 area. However, given the fact that we had 9 straight weeks of up green weeks with the 0 red bars in there, it's not impossible for this to be so overbought that they kind of sell it down in a straight line into the target. So where you get an A and a B and a super extended C wave into that 38.2 area at 16,153, that is not an impossible thing given the overbought nature of the bigger picture market to reset and hold. Now, on the down move, should they start to get into this area, it is imperative that they kind of hold this window of support right here. The 50% retrace is the wave 4 secondary target to the downside. Below that, and it's unlikely it's a wave 4 at that point. So if they're going to hold this as a wave 4, they really need to hold 15,842, which basically comes in the bottom of this window of support. So they really need to hold this consolidation zone from back in November. If they can do that, then we would expect them to push higher back toward the 18,000 area to complete new all-time highs and the cycle to the upside. So again, the expected move would be a bounce first, then all the way into the 16,153 area. But given the strength of the move up, I would not be shocked if we see a more straight line move into that area. Guys, if you love the information that I put out in these videos and you want real-time market updates from me, you need to check out investwithjacob.com. There's a link down in the description. Go ahead and click that link. It'll take you right to the website. Once you're there, check out our membership plans area. We have 2 incredible plans, and they both come with a 7-day free trial. And that's because I want you to get in there and become part of the trading team. I want you to make sure it's for you. I want you to interact with the people in there, see how much value we're giving you. You have nothing to lose in doing this. It is a great community. It is a lot of fun to be in there, and we're making money. And we'd love to have you in there too. You can cancel at any time. We also have our Elliott Wave 4 Beginners online course. This course is helping real traders make real money and understand the market in a way that makes sense. It's very confusing when bad news makes the market go up and good news makes the market go down. It's irrational and it does not make trading easy. Elliott Wave gives you the numbers to watch, and you know what happens when those numbers hold and when those numbers break. You have a secondary path to follow, and you're always ready for what the market throws at you. This gives you a great opportunity to have an edge on trading and understand where the market is headed. It is 25 videos where I go over 3 different parts: the introduction, where we go over expectations, emotion, KISS method, why it works, chart setup and tools, every tool you need to use with Elliott Wave Theory and how to use it, as well as your Elliott Wave 4 Beginners area, where we go through each of the waves, what they look like, how to measure them, how to see them, how to find them, all the stuff you want to know, including corrective depth theory that we talked about earlier, the theory of alternation, the pivot, everything important in the market. The cool thing about this course and every other course we release, we're about to release our advanced Elliott Wave course, is that they are included in both of our monthly rooms. So if you don't want to pay for these courses one at a time, you can become a monthly member and get every course that we release. In our first room, the Invest with Jacob room, you get all of my real-time market updates, all of my buy and sell alerts, all of your Elliott Wave questions answered, a midday video where we go over exactly where we are in the charts as to what to expect, as well as all of the training material we release. We trade the SPY and the QQQ, and we day and swing trade, so we do trade quite often in our room. If you are looking for individual stocks, futures trading, income trading, and advanced training, you need to check out PT's Throne Room. In there, you get everything you get in the Invest with Jacob room, as well as individual stocks, advanced training like the income method training that he does, and PT's reduced risk binary method that absolutely crushes the market. He gets you in at a cheap price and gets you big multiples on your money, and it's how he structures his trades that's so unique. Something you really have to see to understand, and that's another reason we give you that 7-day free trial. He also started a challenge account where he put $4,000 into an account trading mini ES futures, showing you how to build a small account into a large retirement or savings account. Guys, we would love to have you in these rooms so we can all make money together. All right, key takeaways for today. If the ES is going to continue to the downside, the next target is 47.08. From there, there is support. A clean break of that puts us in the 46.60 range next, and a more direct A wave down of the bigger B wave into the 4,500, 4,600 area. If we can get a bounce between here and 47.08, we'd be looking for 47.90 to 4,800, and then down from there into that 46.60 area to complete the A wave, and then B and C on down to 4,500 or 4,600. If, however, they can push over 48.15, that does open the door to 48.81. Over on the NASDAQ, looking for them to give us a bounce and then down would be the standard path into the 16,153 area. The bounce would target about 16,800 to 16,900. They need to hold this window of consolidation here from November. Below that, and it becomes unlikely we're in a wave 4, and we're looking at something a little bit bigger. If they want to push directly higher from here, they need to push back over the 17,000 area, and then we'd be looking at 18,000 overall as our target. Guys, it's the weekend. Grab yourself a drink, get out of the house, have fun with your family, and I will talk to you next week.